Welcome back to Investors Point of View. Hello, all our community members, students, and everyone tuning in. Today, we're going to dive deep into Micron Technology's latest performance. We're dissecting their fiscal Q1 2026 earnings report, which wrapped up on November 27th, 2025. Our mission here is really to just quickly get to the core of what's driving their performance and see how they're positioned now.
Right, compared to the last few quarters.
Exactly. And the top line message, well, it's pretty loud and clear. Record Q1 results. And that includes their highest ever free cash flow, all driven by what they're calling AI demand acceleration.
It really is something. I mean, it's one thing to hear about records, but when you actually look at the figures, the shift is just striking.
So let's start there with the big picture number.
Okay, so revenue. For FQ1 26, they brought in $13.64 billion.
13.6 billion.
Yeah. And to put that into context for you, last quarter was $11.32 billion.
Okay, so a nice sequential jump.
A very nice jump. But now look at the same quarter last year. That was $8.71 billion.
Wow. So it's not just a jump, it's a massive acceleration.
It absolutely is. It really signals a real market phase shift.
Okay, so revenue is soaring, but that brings up the real test, right? The profit margins. Are they just, moving more product, or are they actually selling higher value chips?
That's the key question.
Right.
And the profit story confirms it's all about quality. If we look at the non-GAAP bottom line, so that's profit adjusted for things like stock compensation, their EPS hit $4.78.
$4.78, and what was it before?
Well, just last quarter it was $3.03. A year ago it was $1.79.
So it's more than doubled year over year.
Exactly. And the non-GAAP gross margin tells the rest of that story. It surged to 56.8%.
56.8, and that's up from
just 39.5% in the same quarter last year. I mean, a 17-point jump like that proves they're commanding much higher prices.
Mostly for those premium chips, like the high bandwidth memory that AI models need.
Precisely.
So when the CEO talks about technology leadership and being an essential AI enabler, it's not just talk. The cash flow is there to back it up.
Oh, completely.
They generated a massive $8.41 billion in operating cash flow this quarter.
Yeah, and compare that to a year ago. It was $3.24 billion. That kind of cash gives them monumental firepower for R&D.
Which is critical in this space.
It is. And we can see exactly where that growth is coming from when we break down the business units.
So where is the money really being made?
The cloud memory business unit is the clear leader. That's the chips going into data centers. It brought in $5.284 billion, and get this, with a 66% gross margin.
66%. Incredible.
But here's where it gets really interesting, I think. Look at the margin shift in the mobile and client business unit. Its operating margin exploded from a respectable 15% last year to a stunning 47% this quarter.
A jump from 15 to 47%. That's enormous. Does this mean AI demand is now broadening out to, edge devices like AI-enabled phones and PCs?
It absolutely suggests AI is decentralizing.
Yeah. So this growth isn't just about massive cloud data centers anymore.
Right. That turnaround shows the newer higher margin memory is finally penetrating devices outside the core data center. So they're getting a boost from both sides.
And it seems like they believe this momentum will continue. Their guidance for the next quarter looks really strong.
It's very confident.
They're forecasting record revenue of $18.70 billion. I mean, that's just aggressive scaling.
It is. The primary risk in memory is always oversupply, but their guidance suggests they have clear visibility for now.
And what about earnings?
They're forecasting non-GAAP EPS of around $8.42, which implies they're not just riding a cycle, they're trying to set a new, higher baseline for profitability.
So here's the final question then. Given all this record performance, which they attribute largely to AI demand, do you think this growth trajectory is sustainable for the entire fiscal year? Write your opinions in the comments section below. Thanks for being here. For more financial points of view, you are more than welcome to subscribe to our channel and give it a thumbs up. See you on the next one.